Pakistan is up for sale. The signs are everywhere. Procter & Gamble shutting its doors, Microsoft packing up, Shell selling out, and Uber, Careem and Telenor rolling away from the wreckage. Multinationals aren't just exiting Pakistan, they're running, and they're doing it in droves. At the very same time, Pakistan is hawking its land like a desperate landlord, handing over Gwadar port to China under the CPEC bargain, and dangling Balochistan's mineral wealth in front of Donald Trump like bait. Pakistan can sell its land, it can lease its ports, it can pawn its natural resources, but it cannot sell itself as a credible market for investment. So the question is, if Pakistan is for sale but nobody is buying its economy, only its soil, what does that say about the future of this troubled nation? And what does it mean when Trump emerges as the biggest land grabber of all? Hello and welcome. You're watching Statecraft with me, Geeta Mohan. The context could not be clearer. Multinationals are fleeing Pakistan at a rate that even seasoned analysts call unprecedented. P&G's exit after more than 3 decades is not an isolated story. It is the headline in a saga of disinvestment and disillusion. Microsoft shut down after 25 years. Shell sold its controlling stake. Telenor walked away. Uber and Careem said goodbye. Pharmaceutical giants Pfizer, Bayer, Eli Lilly, Sanofi, Viatris all withdrew, strangled by policy confusion and foreign exchange chaos. Yamaha stopped production. Total Energies pulled out. Each departure chips away at jobs, technology transfer, and confidence. Each retreat sends a signal: Pakistan is not worth the trouble. And yet, in the middle of all this collapse, Pakistan waves contracts in front of Beijing and Washington, selling Balochistan's minerals and leasing out its coastline. How long can a country survive by selling its soil while its markets rot? Procter & Gamble's story in Pakistan is emblematic of the bigger tragedy. When P&G arrived in 1991, it was a game changer. Ariel, Safeguard, Pampers, Head & Shoulders, these became household names. Factories were built, jobs created, supply chains strengthened. For years, Pakistan had one of the world's top consumer bases for P&G. Then came 2025, and P&G called it quits, shutting down plants, closing Gillette Pakistan, and retreating into a third-party distribution model. The products remain, but the investment is gone. What's left is hollow, a brand without a backbone, jobs without security, factories without machines. Pakistan didn't just lose a company, it lost credibility. The exits tell a pattern. Microsoft, after 25 years, reduced itself to a liaison office. Shell, with decades of presence, sold 77% of its stake. Telenor gave up after years of telecom battles. Uber and Careem, once hailed as urban mobility pioneers, disappeared. Total Energies halved its stake. Yamaha abandoned production. Pharmaceuticals collapsed under import restrictions. This is not coincidence. It is a collapse. When global giants from tech to transport, energy to healthcare line up for the exit door, the message is deafening. Pakistan is not a market. It is a minefield. Why are they leaving? The reasons are as chronic as they are obvious. Political instability, where every government change rewrites the rulebook. Currency controls that trap profits, leaving multinationals stuck with rupees that depreciate by the hour. Tax regimes so complex, 30 different corporate taxes, each a maze of bureaucracy, that investors give up before they start. Energy crises, power shortages, costly fuel, and infrastructure decay. Security risks, terrorism, bureaucratic red tape. And the nail in the coffin? Shrinking consumer demand, inflation, unemployment, poverty, 42% below the poverty line, have turned Pakistan into a market that simply cannot consume. What company wants to stay in a country where its consumers can no longer afford soap, or motorcycles. And yet, as multinationals flee, Pakistan sells. The China-Pakistan Economic Corridor was supposed to be a golden ticket. Instead, it turned into a mortgage. Over 2,000 acres of Balochistan, Gwadar port itself, leased to China for 40 plus years, controlled by China Overseas Port Holding Company. Tax exemptions, operational control, sovereignty traded for survival. Sendh copper gold mine signed off to Beijing, with profits bleeding out of the province. Coalfields, gas projects, Balochistan carved out piece by piece, with locals pushed to the sidelines. China gets the minerals, Pakistan gets debt, and Balochistan gets nothing but anger. Enter Trump. In 2025, Pakistan courted Donald Trump with samples of rare earth minerals from Balochistan: copper, antimony, tungsten, rare earths, strategic treasures in a world desperate for supply chains free of China. A $500 million memorandum signed between Pakistan's military-controlled Frontier Works Organization and Missouri-based U.S. Strategic Metals. A deal to refine minerals, to grant access, to open the gates of Balochistan to American business. Trump did not walk into Balochistan with an army. He walked in with a pen, and Pakistan handed him the keys. In the battle for Pakistan's soil, Trump has now outplayed China, transforming himself into the biggest land grabber of them all. What does this say?
It's important that we build a very strong bridge between both of these groups. The Pakistan-U.S. relationships go back, many, many years. Someone was saying, even Jackie Kennedy was flying on Pakistan Airways. And so we view this as a huge opportunity, really a left and overlooked opportunity. I think there's a lot of misperceptions in the U.S. about Pakistan. I think it's a very misunderstood place. And, President Trump believes in economic diplomacy. And that's why we're here. We plan on investing billions of dollars in Pakistan across a number of different areas. Critical minerals and real estate are where we're going to start. From a real estate perspective, we've brought in our real estate development partners and are going to build some of the most high-end luxury properties that have ever existed in Pakistan. We're very excited about that, and we think the people deserve it. We're going to be using materials from Pakistan, and it's a very big opportunity. But critical minerals, real estate, energy, technology, AI are all areas that are really needed here. I even have friends in Texas who have their entire back offices outsourced to teams in Karachi. And I think that model is one that's really, really attractive and something that we're just getting started with.
That Pakistan's government cannot sell the country as a market, a producer, a manufacturer, but it can sell it as land. Companies won't stay for the consumer base, the industry, or the talent pool, but they line up for the minerals under the ground and the ports on the coast. It is a tragic inversion. Pakistan's only asset worth selling is the very ground it stands on. The consequences are brutal. Jobs disappear as factories close. Technology transfer halts as Microsoft, Pfizer, and P&G leave. Supply chains crumble. Consumers face price hikes, shortages, and fewer choices. The government loses tax revenue, piling more weight onto IMF bailouts. Investor confidence tanks, branding Pakistan not as an emerging market but as a corporate graveyard. And all the while, the company limps forward on remittances and debt. GDP growth hovers at 2.6%. Inflation has fallen, but at the cost of suffocated demand. Reserves hover around $16.6 billion, propped up by IMF inflows and loans. A $21 billion trade deficit looms, and 42% of the people live below poverty line. Look at the neighbors: Bangladesh, India, Vietnam. FDI is flowing in, factories are multiplying, supply chains are diversifying. Vietnam attracts $23 billion, India $70 billion, Bangladesh $3.4 billion, Pakistan a meager $683 million. The comparison isn't just unfavorable, it's humiliating. With 216 million people, Pakistan should be a magnet for investment. Instead, it is a cautionary tale. The deeper irony is Balochistan itself, the richest province in resources, the poorest in living standards. Ports leased, mines emptied, minerals promised to Washington, copper shipped to China. Local communities see none of it. Instead, they see fences around their land, restrictions on fishing, and profits vanishing into Islamabad's coffers or foreign bank accounts. Selling land has become Pakistan's survival strategy, but selling land doesn't feed people, doesn't create jobs, doesn't build industries. It only deepens resentment. Trump's Balochistan grab has political undertones too. For Washington, this is strategic, a hedge against China's monopoly on rare earths. For Trump, it is a trophy to take land and minerals from Pakistan without firing a shot. For Pakistan's leaders, it is desperation, a way to find dollars when no company will invest in its markets, and also to ensure that it has US on its side vis-a-vis India. But for Pakistan itself, it is humiliation as well. Trump has not just become a buyer, he has become the landlord, the new custodian of Pakistan's last bargaining chip, its soil. Meanwhile, the exodus of multinationals sends another message to the world and to investors. Pakistan is unsafe capital. Each company that leaves tells others not to enter. Each factory that closes reinforces the perception. It is not cyclical, it is structural. And unless Pakistan fixes governance, stabilizes politics, reforms taxation, secures energy, and guarantees rule of law, the exodus will not stop. In fact, it will accelerate. And here lies the paradox. Pakistan is willing to sell its land to China, to Trump, to whoever pays, but it cannot sell itself to investors. It cannot convince Microsoft to stay. It cannot persuade Pfizer to expand. It cannot retain P&G. Land is for sale, but the market is not. Trump can get Balochistan. Beijing can get Gwadar, but the people of Pakistan get nothing but a failing state and an empty job market. So the story of Pakistan today is not just one of economic crisis. It is one of surrender. A nation of 216 million reduced to peddling ports and minerals. A country that once dreamed of being a hub, now becoming a pawn. Multinationals exit, investments vanish, poverty swells, and Pakistan stands in the global marketplace with only its soil to sell. The question is not whether this strategy is sustainable. The question is, when the soil itself is gone, what will be left of Pakistan? Thank you for watching Statecraft.